Hi, in this video I'll be sharing with you a simple smart money trading concept that you can learn, trade and apply it on your trading platform. So what is smart money concept? Smart money concept is a pattern of trading where we depict the movement of price of institution and then replicate same as a trader. So let's do a brief analysis. The criteria, which is the conditions for each trade, begins by determining the trend of the market. After you determine your trend, you identify liquidity. So one is the trend determination. It begins with first the trend. After the trend, you look for liquidity. You find your liquidity. From the liquidity, you now mark your point of interest, which is your POI. Then the fourth is what? You wait for price to pull back to POI. So have pull back to POI. And then the fifth is that you make your entry. So these are the 5 checklists. First, the trend. 2, liquidity. 3, point of interest identification. Pull back to point of interest. And then finally your entry. So let's see how we can identify all of this. So first, this is the price movement. We were having from this side higher low, higher high, right? Higher low, higher high, higher low, and then we'll have this higher high. And after that, we have a shift of price. Price now take away this low. So obviously from this point we have a break of structure. So it means that the trend of the market has changed and we are now in a downtrend. So what do we have? Here becomes our lower high. Here becomes our lower low, lower high, lower low, lower high, lower low, lower high, and a new lower low. So now that we have identified that we are in a downtrend, what is the next criteria we want to look at? We need to identify our liquidity. So if you look at these zones, we're having something like a double bottom here. This is a double bottom, so there is a liquidity that was sitting here. And also this liquidity of this upside was taken by this candle that pushed to the upside. So we have this liquidity was taken to this downside. So now that we have this liquidity sweep, what is the next thing we need to do? We will now mark our point of interest. So first we are having an order block. So here is a typical order block. That is where our liquidity was taken. So we have that zone marked out perfectly well. Then what else do we see? We are marking our point of interest now. Excuse me, here we have liquidity sweep. This is a double bottom, so there's a liquidity that was swept there. And here as well, we have this liquidity that was taken at that upside. Alright, so we have marked our order block. We don't have a fair value gap. And then no smart money cube. So what do we need to mark next? Our breakers block. So this is a typical breakers block. So I've marked out my breakers block. Now my point of interest can be what? Another block. my POI, which is my point of interest. It can be OB, which means order block. It can be a fair value gap or an imbalance, right? It can be a breakers block. So I'll use BL, or let me say breakers OB. Can be a breakers order block. Can be a fair value gap. It can be a smart money cube. So it can be any of these. It can be a smart money cube. So either another block, a fair value gap, a breakers order block, or a smart money cube. So any of these four will be my point of interest. So in this scenario, I have order block. I don't have a fair value gap. I don't have a smart money cube, but I have this breakers block, which was where price was supposed to hold here to create a new higher high. Price break it, so it becomes a breakers block. So now look at what happened afterwards. Price came back and retest this breakers block. So when price came into this breakers block, price does what? Price gave us this bearish engulfing candle. So our sell entry is here. And of course, you see how the price plays out. So after price played out from that zone, price automatically gave us a new order block from there. Because from here now, price take away this low, right? And then now it gave us a new lower low. So what happened here automatically becomes our new order block. So this again becomes our new order block. And look at what happened. Price pull back into it again. Give us what? Give us a bearish engulfing candle. And then you see how price range until it break down to the downside, which take away this low. So you can see that. So after all of this, you can see that here we have what? We have a liquidity. The liquidity is sitting here because of this double bottom and this double bottom. So we have a liquidity here. So here will be a liquidity sweep. We have that liquidity. Price mitigate this and then move around, clear the liquidity to give us a new lower low. So what are we having? Now we have a new lower high. So this is our new lower high and this is our new lower low. And again, we still have our order block at that zone. So what happened next? Price pull back into that order block, give us a bearish engulfing candle again, and drop to give us a new lower low. And here's our new lower high. So looking at this now, where is our next point of interest? Our order block is now this. So that is our new order block. That is our new order block. Yes. And then we'll have a fair value gap. If you look at this carefully here and here. So though it's a tiny zone, but however, this is a fair value gap on this time frame. So what are we expecting? We are expecting this price now to pull into this zone and then give us a bearish engulfing to come down and create a new lower low, or into this order block. However, in these zones, pay attention to this now. There is a liquidity built up here already. So all of these are liquidity. So here is a liquidity built up across all of these zones. And price will always move in the direction of liquidity. So we have all of this liquidity that are built up here. Remember, this order block, our mark here, has not been mitigated by this price action. So if price fail to play this particular order block and fair value gap to the downside, It simply means that price will now push to this upper zone to mitigate this particular order block. Okay, then it will begin to drop from that zone. That is, this whole liquidity on this zone will be taken, and then price will begin to fall to the downside. So that is how exactly you can do your analysis. Thank you for watching, and if you have gained value from this video, don't forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video.